Well, well, well. Look what the cat dragged in. Welcome aboard, everybody. All right, so this was an exciting run in the market. Let's take a look at a couple things, and I will express to you that we have a couple things that we're a little concerned about moving forward with tomorrow's unemployment report. First off, what a run up in the market. You guys know that we did a video the other day. We said that our system, the SPY system, was long. Specifically from 278.05, and here we are at 284.75. Now, we do have a trailing stop as this line in the sand there. Let me bring it a little bit better into focus for you, if you will. Here we go. So this is our spider system, and as you can see, caught not the low, but caught a beginning of the breakout. And by the way, I must tell you that this was a very special type of buy signal because it came at the our momentum volume indicator. Some people think they're a little confused that this was a moving average convergence divergence price indicator. It's not. It's a volume indicator. It takes changes of percent rather than relative change of volume, and it's also a momentum. So it's got two components: the moving average lines and the momentum. So it's very, what's the word? Advanced is the key word. So moral of the story is, let me get back to this page with you guys. We bought in, and the system, I generated this. Now, J-Person Asset Management didn't take a SPY position. We flipped over and used the leveraged ETF on SPXL. By the way, we are flat on that trade. Why? We overrode our own system, and there's a couple things that I think we're going to see. I was warning all day long in the live trading room that this is a very unusual reading. Look over here. You see when the momentum goes down and the price goes up, boom, reversals happen. I'm not saying that we're going to get another key reversal to that magnitude, but it more than likely with tomorrow's unemployment report and the weekend, next week, looking ahead next week, there's really nothing in terms of Lululemon as earnings. Unemployment report, Friday's retail sale. I'm talking about a week from this week. And then that leaves President Trump and his tweets and what we're going to do with Mexico and try to negotiate there. And again, if the world says, hey, we're not going to take advantage of America, then we're back to business. If China, which today they kind of announced that they're shoring up relationships in Europe, they're shoring up relationships with Russia. The only one they're not shoring up relationship is with the U.S. Well, we're their number one customer almost, so you would think that they'd want to shore up relationships here. We'll see how that goes. All right, what do we do about the market? I saw that this the other day that we would get a run up. My price projections, we hit a target of a resistance. Market came right back to where we started this party, right here from before last Thursday night at 7 p.m. when President Trump tweeted he was going to initiate tariffs on Mexico. You remember that? That's where this whole downdraft started. So we came back up, we filled the gap, and we rallied on a great little uptick with a bullish convergence. But today, when we finally reached that upside into near the 286 in the spiders, what did we do? We were losing momentum of volume, and volume trend was negative. That's not a good thing to stay long, so we dumped our long positions. Let's take a look at the volatility, the VXX, because I did tell you that the system was long, and we were long, and it got out, and it went short. So on volatility, if stocks go up, volatility should go down. This was a major divergence situation anyway, because as stocks made a new low last week, volatility did not make a new high. This was kind of a divergence in of itself, one of the things we warned about. Now, look, as the price rise, what did the volume do? It's the same pattern as the S&Ps, and then what happened? It melted down. So that's kind of a concern of the picture that we have for the S&Ps right now. It could resolve itself, and it might not. But here's what we noted today. As the VIX was making newer lows, look at the volume trend. It's going up. When volume trend goes up and price goes down, typically we get maybe bounces. So when price goes up and volume trend goes down, what happens? We get bounces. So I'm suspecting we may get a slight bounce, and it's that bounce in volatility, and it's that retracement in the SPOOs. If we get it, that'll tell what the next major move will be for the next couple weeks, whether it's going to be a new high in the S&Ps, you heard me, a new high in the S&P, or another downdraft to retest last week's low. I did say a new high in the S&Ps. So here's our algo strategy today. Did I think a pretty fantastic day for guys that were in the room. Yeah, it went long, got a quick stop out because it didn't take the profit. It came close. There's your profit target. Jumped right back in on the trade, and as you can see, the volume indicator was positive. That's a positive reading. It's going up. It jumped right back on the game. It took forever, and I know one of our room members said, and I quote, "The excitement is killing me," and it looked like that was posted at approximate, well, so that was posted at, what, 247, because the market wasn't really moving, and then all of a sudden, it took half the profit where it should be right here, and then finally got out of the balance right there. So that's, and it max barred out, which means the holding period, it didn't get out for anything other than its average, what we back test the average holding period, ran out of steam. Then finally, when I was telling everybody, hey, this volume is starting to dry up on this rally, and this is probably a short squeeze rally, I said, you can take a short trade if you want, into the Globex, and here it is. Now, the market's going to close in a few minutes, and this will, and you can see it's still open, and this will liquidate because this model gets out of everything at the end of the day. So that's neither here nor there. But as you can see, when you get a sell signal and the volume trend is moving down, it's a positive thing. That's great confirmation. So that's what we did in as far as the room is concerned, the current positions in the marketplace. Now let me get into what I talked about the other day with different stocks. And for that, we're going to take a look here. First and foremost, let's look at the advanced decline and the brazen comment that I just made. You may find this to be brazen, but let's first take a look at the S&P 500. Let's change this over to a weekly chart. I don't know where the market's going to end tomorrow, but let's just pretend. This is pretty bizarre. Let's pretend it ends here or maybe a little bit lower. Or it just stalls out. We have we could pull back just a little bit, but we formed what's called an equal and opposite, a yin and the yang. The market pretty much negated itself from last week's sell-off, and now we're back to a weekly breadth reading that is very supportive. Now, this is where I'm saying if we close here Friday and the stochastics has already worked from oversold to, or overbought to oversold, we're only at a 37% reading. That gives us a shot that we could get back up into overbought territory in the next few weeks, or this summertime we could get a summertime rally. And if we do get a summertime rally, if the advanced decline is legit, if tomorrow closes positive, probably next week your 280 to 278 would be strong support. And yes, I'm expecting the market to retest that high. That's the brazen call. Let's take a look at the same thing doing the Dow Jones Industrial Average. So I would normally give you this information out at the end of the week. I can't because I'll be on a cruise, our financial cruise here at Person's Planet. We have an annual cruise. Last year was Europe. This year we're going to the West Indies, or the southernmost part of the Caribbean, St. Lucia, and again Barbados. So with a group of investors, we're going to be diving off Sugar Beach, right there between the two Grand Tetons in St. Lucia. We'll be going to St. Kitts. We'll also be in Barbados, where the monkeys, they have these really cool little monkeys that run around on the golf course. It's a really phenomenal island. It's very cool. So that's what we're excited about. We're going to be with a bunch of traders. A lot of them are actually clients in J Person Asset Management, so we'll be discussing strategies and going over a few other items for Algo 17, the product that you've been seeing these trade signals be generated with. So I can't do the video, and if I disappear, now you know where I am. I'm in the Caribbean, working though, working. It's a work vacation. All right, now here's what I'm suspecting. The Dow Jones Industrial Average. You look at some of the components for the Dow Jones. Coca-Cola new high. American Express looking pretty good. The Dow component, Cisco, another one doing pretty good. There's a lot of other stocks in the Dow that haven't caught up yet to their 52-week highs. I'm suspecting they could. This is a pretty powerful equal and opposite pattern. It's supported right against the person's pivot. That's a quarterly pivot, by the way. See, April through, this is a quarter right there, financial quarter. Look at the advanced decline. Whoa. Now, the only thing lacking in this market is volume. And I got to tell you, that's always a concern. Maybe volume comes into the game when people feel more confident, and confidence would come from maybe a relief that the trade wars with China are over. Confidence would come from maybe a peace accord within our executive and legislative branch of government. Maybe that would be kind of nice. And also to get deals done with the NAFTA 2 or 3 or whatever you want to call it, or at least no more tariffs on Mexico. So that would be a good thing. Anyway, if the Dow does support here, and if we do see this market maintain its high value, it crosses or negates last week's negativity out the door. An uptick in advanced decline, that's expressly positive. All right, let's move into looking at the NASDAQ 100. So the NASDAQ 100, as you can see, this is really strange readings. We made a new breakout high in the NASDAQ 100 on a weekly basis. Now, some people don't really like the weekly readings. I do. And I'd have to say this, to me, is not a double top in the market. You would say, why do you think that, person? And I would tell you, because the advanced decline made a new high. So if the advanced decline made a newer high, it supports not this being the high that needs to be challenged, but this is the high that needs to be challenged. And if the fact is, if we can get some momentum going, Apple, Google, Facebook, Netflix, biotech, Amgen, Biogen, Regeneron, if we can get some of those names that are heavily weighting with the Qs, we've got new highs coming there too. So this is, again, this is still a positive there, but again, not as positive as the Dow and the S&Ps. What about the Russell growth stock? This is one that I actually got wrong, and I'll tell you how I got wrong. I felt that the market was in this amazing resistance zone, and this is the support zone. And I thought we would hold there because, quite frankly, the volume wasn't terrific on the sell-off. The volume wasn't terrific on the sell-off. And more importantly, the advanced decline actually supports an eventual new high in this market. So my timing was off. We did take a long. I did get stopped out. So end of story. But if we get back up into this, let's say, trading body of the trading range, number one, if the advanced decline can uptick, if we get an uptick in volume, I am looking for an eventual return to those highs. And from 149, that's up to 180. There's a lot of room for profit. So I am watchful to get back in on the Russell trade. A lot of people, meaning institution traders, don't like it. They think because of the China tariff situation that small cap growth stocks, they don't make money, number one. They don't provide profits, and there's no growth potential because people are pricing in and expecting some kind of recession. That's why the market's pricing in what? The Fed to cut rates. It's interesting, a lot of work, older work that I did in a couple of my books, I talked about a lot of work done with business cycles. And when the market feels that there's an onslaught or an oncoming recessionary time frame, you get what you're seeing now with interest rates, yield down, and an inversion in the yield curve. But you also get this. Let's show you this chart. You start to see XLU. People get into utilities and they poured right back into the utilities this week, and that to me was, I mean, it was not a small move either. It was a high closed doji. It was a big breakout. It was on decent volume, by the way. There's the volume indicator, our proprietary volume indicator, and here's on balance volume. It really supported this rally in the utilities. Now, we are up against a long-term trend resistance. If you just look at that. So I would say that this will be something to watch for the next couple days and next week to see if it fails from up here at this high. But boy, that volume was pretty supportive. But my volume indicator is showing a slight divergence. The relative strength is still fairly positive because it outperformed the S&Ps. That's what this indicator, bright blue, is about. So my thought is this, gang. 61 up near this upside trend line resistance. More importantly, anywhere between this old pivot resistance and this new pivot resistance. That's a target area of what I would say the market could find resistance. Watch for key reversals off of that. Let's call it 61, 61 and a quarter, somewhere around in that range. That's something we would be watchful for. XLP. People generally flock into staples and they flock into utilities when they're fearful there's an early contraction in the economy. And that's what we see right now. Where do they come out of? Well, technology. They come out of technology. There's the laggard right now. Technology is lagging. People don't get into technology. People don't get into XOP. XOP. I said XOP. And so just to give you an insight, if the investment community, the guys with their finger on the billions of dollars, right, if they don't feel that they should be in that market, they won't get in it. I see, and this is where we kind of were talking about the other day, if we can get over the pivot area, then we're back, baby, to better things to come. The energy stocks still pay a dividend. You can't get the argument that if there is a recession, we're still not putting gas in our cars with the unemployment report and the strength of the employment numbers that we've seen. I think that this is not necessarily a contraction of a sector that's not making money. I think it's a strike of investors that don't want to put money into stocks. But we're coming up to earnings season, and I'm here to tell you something. I cannot tell you that people aren't filling their cars up. People haven't been traveling. Travel numbers are off the charts. Airlines are expecting to see some of the biggest numbers of people traveling, bookings. These are all very positive things. There's consumption of energy, and I'm suspecting that XOP and oil service sector, OIH, it's going to find some money coming into the market. My indicators right now, at least, are suggesting that we keep our eye here and get ready to get into some of these sectors. So XLE today, which is a little bit different, XLE outperformed the subsector oil and gas. XLE kind of outperformed, again, OIH. Why? Exxon had obvious upside. And then CVX, Chevron, had a big effect on the energy XLE. Those two stocks really took off relative to anything else. Hess is one of my favorite stocks that did not generate a buy, and that's what I'm waiting for. Occidental, OXY. No one really liked this stock, and to be honest with you, I don't like this technically except for one aspect of the market. Something weird is going on with a huge disruption of volume in here, and I think it will resolve itself one day with one big old push to the upside. You can't have some of these other refiner operators go down and only two go up. And by the way, COP, ConocoPhillips, it didn't move. So there's something fishy going on in the energy space, and I think it is more of a maybe investment funds don't want to put their money into that space. So we need to watch for that. All right, let me show you two more things and we'll cut this off. Semiconductors did get a little bounce, and the other day I gave you a couple things that I really key in on which is when we get daily pivots greater than weekly pivots. That's in itself a decent buy signal. So here's your weekly pivot, here's your daily pivot, here's your daily pivot, and your daily pivot. So we're starting to see a reflection of change from downtrend in price to sideways action, and now the pivot analysis is supporting a new trend. So that's a very positive thing happening. So a couple names, NVDA, let's take a look. NVIDIA, it's starting to gain a little bit of traction. AMD, which was a real big one today, in terms of price or percentage moves, really broke out. And again, look at the relationship between these daily pivot, daily pivot, daily pivot. When the market's truly bullish and it goes from maybe bearish to bullish, the first thing that happens is price will trade above the weekly pivot. When the daily pivot starts trailing or trading above weekly pivot, that's very positive. And then most importantly, keep this in mind. The pivot point, which is that fuchsia colored one, the daily pivot, it actually acts as support or the low of the day. So in expressly bullish conditions, that's your, and as I said in the video the other day, if you don't believe me, go look at the video. I expressly said this change in value of daily pivots greater than weekly, and I even said daily pivot point greater than weekly pivot is a buy signal in a system set up in of itself. Now, when the market is truly bullish, the daily pivot, that's that fuchsia, acts as support in a strong bull market. So there's a classic example that happened here. I was looking at this stock. It's called Micron Technology. Now, it lagged. It didn't get up and going, but I'm here to tell you something. It's got a very interesting, huge, maybe this is like stocks normally do, that time bomb, delayed reaction, where, you know, some investors, they step in, they get in, and then they lay off it for a couple days, and then you see follow through. What I want to see is what we have not seen, which is the same thing needs to happen with this stock or any stock. Where's the daily pivot right now? Where's price? Daily pivot is not, price is below the daily pivot. So the daily pivot is acting as resistance, not support. The price has to be above the daily pivot. So if we can get market back in sync with trading back above, look, when the daily pivots are below weekly pivot, no good, right? Pivot acts as resistance. If the market's going to be good, we got to get the price back going. It's not there. It's set up. It's got volume. So therefore, we are looking at Micron to catch a bid pretty soon. So here's our watch list. Was Range Resources, HPQ, Halliburton, XOP, AT&T, Wells Fargo. These are some of the stocks that we were running and watching, and I did another special expose, and I did the same thing with FedEx, as you recall. Guess what? FedEx never got above its pivot yet. So there's a setup there, and if we're on the cusp of a major breakout or at least a challenge of the highs, we need some of these sectors to join the party. We need the financials to get in the party. Lastly, the momentum name, Shutterfly. I mean, I've got a list of different names that I have here, and I have a couple new, the IPO, like Beyond Meat and Lyft, etc., etc. What I'd really like to see happen right now, gang, is tomorrow. I want to see a new change. If there's a sustainable trend coming rather than just a tradable low in the market, I want to see the energies gain momentum, and I want to see, more importantly, and this is the key, I want to see weekly PPS buy signals. So I need to see some of these sectors carry their weight, A. B, we need to cascade from 60-minute to daily to then weekly PPS buy signals. So here's what you do. And finally, we're going to go right over here and go to your scan. This is Thinkorswim. Go over here to where it says studies, and go to license study, and then find license study, find PPS buys. I already teed it up for just to speed through this. And what we want to do is you can look at scan in by industry. You can scan in whatever you want. Now, just to make things a little bit faster, I went S&P 500, change your time frame from daily to weekly, hit the button scan. If Friday, tomorrow, we close, it's telling us here's the names that are generating new, fresh buy signals. The other day I did this with you and I said it's amazing because in the materials sector, we were getting a big lift off in chemical stocks. And that's what's really in the XLB. You will notice if I go over to, let me get something here in XLB and we'll wrap this up. Wow. Maximize sell. That's one of the leading sectors of the market was materials. And it's not because of U.S. Steel. It's not for FCX, which is Freeport McMoran. It was a lot of stocks in the chemical space catching a bid. Dow Chemical is one. So that was, we found some really gems, really juicy gems in the market, and that's what helped lift this market. What I want to see tomorrow, I don't want to see investment real estate companies. I don't want to see utilities. That's defensive. I want to see more biotech generate weekly buy signals. I want to see more stocks, and I want to see transportation kick in a little bit stronger. And that's where if you're not, if you don't have our indicators on TradeStation, obviously Thinkorswim, they provide that to you, and it's fabulous between the relative strength PMC indicator, the person's pivots, and you can pretty much create on Thinkorswim the way I've outlined this with daily pivots greater than weekly pivot. Look at this, exactly what I was talking about. Daily pivots above weekly pivot, mark it up. Very good stuff. Thank you for watching. Thumbs up if you like it. Leave a comment. Say, hey, John, we'd like to see other things, and I'll get it. I'm trying to do a top-down approach and figure out if the market is truly bullish, do you do the dash for trash or do you got to be selective? This market is still telling us we got to be selective and be really on top of stock picking. More importantly, we could, if the market is tricky, and that's what it is, right? I mean, it tries to make new highs on light volume and fake everybody out. It tries to make new lows and stop everybody out. I mean, the market is dynamic that way. And my overall opinion of the market is that we will make new highs. It's how we get there. And I want to make sure that you're safe and you join the trend. Thank you for watching. We'll see you next week.